Hello and welcome everyone. My name is Rachel Dashiell, Senior Manager of Trading and Derivatives Coaching here at Charles Schwab. I'm also just your host today for getting started with technical analysis. This is a beginner's technical analysis class where we focus on the basic concepts of technical analysis. And today we're going to focus on momentum and momentum divergences, how they're used, how to spot them, and what they truly mean when it comes to the momentum of a particular asset. So please feel free to chat in your questions, comments, requests today during this session. We have James Boyd there in the chat. Please give us both a follow on X. He is James Boyd CS. I am Rachel CS. Please like this video today and subscribe to our Trader Talk Schwab coaching on YouTube. So before we dive into the fun concept of momentum with the trend, let us dive into some important disclosures here first. So the information we're going to cover here is for general informational purposes only and should not be considered any type of recommendation or advice. Options carry a high level of risk and are not suitable for all investors. And we're going to go through the paper money software application today. It has a few differences between paper money and live, so keep that in mind. One of the things that you may run into is you may not have options assignment on paper money, but you would possibly in live. So a couple differences there between the paper money and the live. So let's dive into what our agenda is today. We are going to just review the RSI indicator today. We're going to talk a lot about that one. We're going to define divergences. We're going to review some examples on charts, discuss the differences between divergences and confirmation, and then we're going to go through some example trades here as well. So let us dive into thinkorswim and let's talk about what we are seeing here, especially with the S&P 500, just for our little market overview here. So with the S&P, we are breaking through resistance here. We have seen that break right around 6,900 or so. Yesterday making new all-time highs. Today kind of trading within that range that we've seen. And we will talk about what we are seeing with momentum here, but I just kind of wanted to start with just understanding the difference between price, the difference between momentum. So the number one thing that we learn with technical analysis is that price is number one. So the number one thing we follow as technicians is price. All the indicators that we use are all derivations of price and or derivatives of price, which we will see here with the relative strength index that we're going to use in today's discussion, or what we would call the RSI. So let's talk a little bit about what RSI is. It's going to be this indicator on the bottom here that we're going to see. So for those of you that are new to RSI, this is really a bounded indicator from 0 to 100. And this is essentially just taking a 14-day period. Since we have this chart on days, it's obviously going to adapt to whatever chart aggregation or time period you have. And it's essentially going to calculate a ratio of how many up days versus down days, or up closes versus down closes that the stock has had. So with more up closes, that security is obviously going to have a higher value on the RSI, sometimes leading at or above this 70 level, which is considered an overbought level on this indicator. Now, on the other side of things, if you start to see a lot of down closes in that short period of time over that 14-day period, you may start to see that that indicator may near the lows of this indicator here around 30, which would be an oversold signal in the RSI. So overbought does not mean sell. So when a stock goes to reach overbought levels, meaning that it has moved up quite a bit in that time period that it's measuring, it does not mean sell in that case. And same with if it breaks down to below the 30, that does not necessarily mean buy in that case either. So we're going to talk a little bit more about that as well. Now, we're going to use this indicator primarily today for looking for measures of confirmation, but especially divergences. So, and what do I mean by that? So, confirmation really exists where we see the trend moving up. So, we all know what an uptrend is. It is when we see higher lows and higher highs. So, I'll kind of just depict this there. We obviously have higher lows here in trend, and at the same time we're seeing these higher highs being made. So that is the characteristic of an uptrend. That's the number one thing that we look for is price. So price is number one. Now the next thing we can do is look down to momentum and see if momentum is confirming that move. And so what we would technically see in momentum is we would see that price is, or the indicator is making this same, or I guess in this case, let me get rid of this drawing here. If price is making higher highs and higher lows, what we're going to look at in an uptrend for the relative strength index is to see if the relative strength index is also making higher highs in this case, or if it's making lower highs. So confirmation in this case would be if price is making a higher high in momentum than it did when we had a lower high over here. So I'm just going to do this as a comparison and kind of show you here. So if I'm going to take the last time that we saw a previous high here, I'm going to connect that right here with the price. So over this time period since the end of October, we've seen that price has made a higher high. Now, if I look down at that same spot in the indicator, we can see that there is a high being made in the indicator. And I'm going to connect that to where we currently are in this indicator where we made this most recent high. Okay. Now you can see here, price is making a higher high, but the RSI, the relative strength indicator indicating momentum, is creating a lower high in this case. So since that's not making a higher high, that momentum isn't giving us confirmation in that case. So what does that really mean? So this can kind of help you with the decision-making process when you are kind of complementing your process when trading the trend. So momentum's not going to be a standalone trigger, not a standalone rule, because you remember the number one rule is price. So that we know that the trend is your friend. Once it bends, that's when you got to pay attention there. But momentum is used kind of as a early warning sign in this case. So because the trend is still up, we are still making higher highs in price, higher lows. We are just going to use this as a possible early warning sign that momentum may just be slowing down a little bit. This isn't going to give us an indication to a possible reversal. That's not what momentum does. This just shows us that momentum may be waning just a little bit. So we want to keep that in mind as we kind of approach some of these things. Now, divergences don't define entries either. So if we see a divergence here, they don't define entries or exits. So we'll kind of talk about what a divergence looks like in a bullish sense. In this case, we are showing that this is a bearish divergence because price is making the higher high. The indicator is making a lower high, so we would consider that a bearish divergence, but that's not going to signal an exit for us, okay? And we're going to see that on the flip side when we look at a couple examples. So one other thing I kind of want to talk about here, when we look at the long-term S&P 500 chart as well, I'm going to back this out to the monthly, because you can use this indicator on many different time frames as well. So I'm going to kind of show you this here, why divergences don't necessarily mean sell or why they don't trigger an exit. So the reason why is because if we look here and we look at this high that was made here and we connect this to the lower highs, we can see that momentum had a little bit of a divergence there in this kind of period where we made higher highs and made a lower high. That ended up being a little bit of a signal to a pullback. But obviously, remember, we're going to make our first decision based on price, but that was kind of a warning sign there. Now, if we look for confirmation, let's see when price made a higher high in this case. So if I take this period here and I take this same level to where it made a high, we can see confirmation in that case. So that was giving us an indicator that momentum was confirming. Now, some of you may ask, well, we see the RSI in this level above 70. It's in this overbought level. Is that kind of giving us an indication to a possible top? Is that possibly bearish? What does that mean? Is that a sell signal? No, it's not. So essentially, when the RSI reaches those overbought levels in that case, that is just a lot of the times a result of an uptrend. That doesn't necessarily mean it's giving you a sell signal or things like that. You are going to get those signals from price itself, not necessarily momentum. And price can actually stay overbought for extended periods of time in an uptrend. You can actually see here, this was March. I'm going to zoom into this a little bit. So this was March when price began its area to, or I guess February, because that's when it turned red, where we moved to that overbought level in the S&P 500 on a monthly basis. We stayed overbought until 2022. So that was almost a year that the indicator momentum stayed in that overbought zone, and that trend continued to persist. So a lot of times that overbought indicator or above 70 in the RSI just means that there's an existing uptrend going on, not necessarily a particular sell or topping signal there. Okay. So let's look at a couple examples on how to spot some of these divergences, because we talked a little bit about confirmation, divergences, more about what the RSI really means and how to use it. But let's kind of talk a little bit more about some individual stock examples that may have these types of setups here. So these divergences or confirmation signals, especially with momentum, help a ton when it comes to looking at areas of support or resistance. So especially when stock is making new highs or making new lows. Excuse me. I didn't figure out how to use the mute in the last class, so my apologies there. Getting through a little bit of bronchitis here. So let's take a look at a few different examples here. So I'm going to look at eBay. Now, this is a stock. I've obviously drawn a few different technical levels in eBay here, and I want to look at this recent trend that we saw, or this breakout that we saw from this area of old support, or was old support, then became new resistance, and then is now new support. So this is looking at this area here from the breakdown of support to where price is right now. So you can see that price is obviously making a higher high. Same thing here in the RSI. So we take this and we connect it there. Price is making a higher high in this case. So this is giving us confirmatory evidence that as price breaks to new highs, the momentum is following with it. So when we do see that kind of pair up and we do see that break of resistance, almost kind of like we saw here, here with this just little short-term consolidation here, or if you want to call it a pattern here, we did see that breakout, but it was all on positive momentum as well. So that would give us a little bit more conviction to enter that trade at a break of old highs, or seeing a break of resistance on that strong momentum. So let's go through another example. Let's see here. Let's look at a couple bearish divergences. So let's look at Google, for example. Okay. So Google has broken to new highs in this case. So I'm going to take that line, draw it from those previous highs. I'm going to take this line, draw it from the previous highs, we're just seeing a slight bearish divergence. We haven't seen a break in trend. So what this could mean, we're still reaching overbought levels in the RSI, which is just like we talked about, a characteristic of an uptrend. But a lot of times what these bearish divergences may lead to is just maybe a little bit of a pullback, or maybe even a retest of that old resistance. So if I take this line and I connect it with those highs, this is going to be that level of old resistance, now new support. So a trader in this case, now it's not guaranteed, but a trader in this case may say, okay, if we're breaking to new highs, gapping above, or not necessarily gapping above that level, but moving above that resistance level, and we have a little tad bit of a momentum divergence, a trader may look for a retest of that support to firm that up again. So that may just be sometimes foreshadowing that support retest as another technical level for that trader to enter in on that break of resistance there. So it doesn't technically mean a reversal. You need to obviously see that in price as well. Okay, let's take another example here. I'm going to go to the bullish divergence one, because we talked about that as well. So let's look at Dell. This has been one that I've been looking at over an extended period of time here. And we see a pattern forming. We can talk about that more on Wednesdays at 1 p.m. Eastern time with trading price patterns. But essentially what I want you guys to see is that we have this area of support that's been firmed out here. So we have this area of support that's been touched many, many times right around this 116 level. I'm going to zoom in closer to that. Okay, and with this recent retest of this support zone, we actually saw, if we connect these recent lows to these lows that we just saw the other day, that's giving us a lower low in price, okay? So a lower low in price that's being formed there. But what is that? What do we see on the RSI here in this case? We can actually connect the lows in the RSI here that are below the 30 level and connect them with the most recent lows here that we saw on that same day that price made that lower low. And in this case, when price is making a lower low, but the RSI is making a higher low, this could be telling us that momentum is exhausted to the downside and is waning to the downside. So momentum could be, so that could be a possible indication of a possible trend change here in this case, but obviously we want to wait for confirmation of that individual stock there. So what did we actually see in price if we zoom a little bit closer? Oops. What did we see in price? So I'm going to zoom in closer here. We saw a little bit of a hammer candle at these lows. And a hammer candle is really telling us at lows that that could be a possible bullish reversal. So at the same time that we were seeing momentum, a momentum divergence in this case, we were also seeing a bullish hammer, which is showing that small body of the candle. So the difference between the open and the close really residing at the near the upper bounds of that candle with a long lower wick. Okay, we have seen follow through with that the past couple days. So that could be telling us that price is beginning its kind of shift, trying to bottom out here. But again, we need to keep in mind that price is still in this downtrend. So we need to wait for price to actually reverse before we would take an entry on that trade, because momentum itself is not a signal, but it could be that early warning sign that our trend may be looking to shift directions, okay? So I showed you a couple different examples. Any questions there? I'll keep an eye on the chat. I don't see any so far, but I wanted to kind of pause here to see if you guys did have any other questions before we go through a few more examples here in this case and before we place a few trades. I'll give you guys a minute to put that in the chat if you do have any questions. Let's see. I see that JB just answered one of them. Let's go through a couple other examples here. So let's take a look at where we would find, let's take a look at where we would find another kind of bullish divergence here. So let's look at, we're going to look at Salesforce. Okay. I'm going to look at Salesforce here, okay? Obviously, today's price action is not so friendly for the bulls, but if we take a look at what has really kind of taken place over the last few months, we're going to look at a few different things, okay? So we can definitely see this familiar level of support being carved out right around this like 230 zone or so. So we see these lows being hit multiple times. Now, if I just take this low to this previous low where we had that break of support, that's going to show a lower low that trend was broken in that case, that was made. If I simultaneously take where momentum was at the time, which was those overextended levels to the downside, reaching a 20 on the RSI, and connect that with the lows of that same day that price made a lower low on the indicator, that is giving us a signal of a bullish divergence. So that was our first signal that this trend was possibly going to, or I guess that the trend to the downside, the momentum in the trend to the downside was likely slowing down. But we didn't get our reversal until we really saw a break in that trend here. So I'm going to zoom a little bit closer so you can actually see where momentum or trend trader may have taken that trade. And probably right around here, because we can see within this period we had lower highs being made, lower lows. I'm kind of going to draw that here. So that's just kind of showing the downtrend here. Then we had the equal high being made, and then we had a gap up with that breakthrough on this candle where we not only had a higher high being made here, but it was also touching resistance of this last swing high as well, giving us that indication that we did have that break in trend. Now we're obviously seeing something a little bit different in this case, but that kind of gives you an early indication that momentum could be giving you a little bit more of a signal or that early warning sign that we may see a shift. But remember, price is king. We want to wait till those changes in price before we take a type of action as a trader. And it may give us also, with some of these divergences, it may give us more of an indication kind of where to even manage our risk as well, because we want to know where we're wrong if we are wrong in that sense. So a lot of times you'll use these divergences around those levels of support or resistance, but don't forget we need to always match it up with that trend as well. Let's see if we do have any other questions. We can consider volume, Chris, but as far as just today's kind of discussion, we are mainly focused on momentum. But to Chris's question, a lot of traders may look for moves in volume when we see a break of support or resistance. So I'm going to actually put that on the chart so we can kind of show that here. I usually take it off if I'm just kind of teaching on one concept, but if we look here on this break of resistance like we saw with that latest example that we just went through, we had this break of resistance, and what did that occur on? High volume. So that's giving us that confirmation not only with one, that break in the trend, but also the participation in that trend because we have that increase in volume. Now, if we had that big candlestick and not really in a large amount of volume there, significant increase in volume, maybe 20% more than the average, that may give us another little warning sign to a possible false or early breakout in that case as well. But that's kind of what we're looking at with momentum in that case. So I'm going to take this off. Okay. So we went through a few different examples today. Excuse me. Okay, let's take a look at something that someone put in the chat here. SMCI. You mentioned it's forming a bullish divergence, okay? So let's take a look. I'm going to take these drawings off. We're going to use this as a live example. I really don't do that in this class, but I think we'll take the chance and use a live example in this case. Okay, so thank you for calling this out, Rocco. This is going to be one of our examples that we can use for a bullish divergence in the RSI. And why? Because we can take this recent swing low to the current low right here, and we can compare where the lows in the indicator were. So we had the low being made, a low being made here. We can actually see with each time that price made a lower low, especially here where we saw that break again below the 30, and especially now where we're making those new lows here in this sense, we are all the while making higher lows in momentum. So this is a bullish divergence there. Great call out on a live example there. Let's take a look at where price may need to be for an options trader or a stock trader to possibly take a position in this particular kind of trend where you may see a possible reversal. Well, let's see. One, it's kind of funny that we do have this momentum divergence at the same kind of level that we are seeing maybe a long-term level of support here from those lows from February. But let's look even closer. Where can we spot out a level of resistance? Just in this recent trend, where can we spot out a level of resistance that we may be watching as a trend trader? I'm curious on what you guys have to say. I'll draw my level of short-term resistance here where I may say, hey, this could be as a trader where we could see that possible reversal of the trend. So put in the chat what price that I should draw this line of short-term resistance that may give us a signal of a possible change in trend. I'll give you guys a minute there. Okay, now I see the responses coming through. Okay, I see 32, 31-ish, 3162. Okay, very precise. I like it. Okay, so with this one, yeah, we're kind of all on the same page here, right around this 32 level. If you want to be real precise, like one of us, 3162 looks like that level that we have here. We also, if we kind of take that those recent lows here in the really short term, we can see another level has been touched a few times, okay? So I'm going to extend this out a little bit so you guys can see this. So right at these lows, where we have this bullish momentum divergence, typically this is what you kind of start to see before a reversal in trend. So typically price, I will say this. So typically we don't see automatic V recoveries in price after a long, persistent downtrend. I know we have various examples like earlier last year or coming back from COVID, things like that, where you had that long downtrend or kind of a very fast-paced downtrend and you had that V recovery. But a lot of times, more times than not, you will typically see that the stock starts to form a basing pattern at a low. And What this typically means is you may see like a little bit of a box formation here or rectangular formation here where price really just trades in a little bit of a range before it has a possible reversal. And a lot of times you will see that one last sweeping low of price. Sometimes it continues downward, but this is kind of what you typically see as the start of a possible reversal. But a trader may look for a move above those recent highs and recent lows, firming out this resistance level around 32. That may be the first signal to a change in trend here. The next signal would probably be right around 36 where we see those recent highs, and that would give yet another possible indication to that change in trend. So a couple different examples there and where traders may wait to possibly take a bullish trade if that is what, in a sense, what they are seeing here for a possible reversal. Again, always trace it back to price. Price is the number one indicator. Remember, momentum is just a derivative of price. So that's kind of like our spidey sense, our warning signal to a possible reversal in this case. Okay. Let's take a look here. Okay, so I have a few different examples where we are seeing confirmation, where we can place a couple example trades. So let's take a look there. We are going to look at, I know I already looked at this one, eBay. We saw a little bit of confirmation here where we saw the higher highs being made in price. We saw the higher highs being made in momentum. It looks like that next area of resistance may be right here around 96 or so, where we see is kind of still the rest of that gap that would need to be filled from October 30th. So that would be kind of the first level of resistance. If we can get past that, the next level is going to be right above that sweet round number of 100, right around 101 in that case. So we're going to use this as a confirmation that there is strong momentum in this name. We see that in the trend. It's making higher highs, higher lows in this case. So I'm going to craft a trade out here on the trade tab. And let's put this together for a bull call spread in eBay. So let's take a look here. I'm going to look 38. I'm going to look a little bit further. I'm going to look at the 20th of March with 66 days left until expiration. So that gives me a little bit of a time here for price to make a move. I am bullish in this sense. I've seen that price and momentum look like they are trending to the upside. So I'm going to take a bullish trade with not taking on, I guess we do have limited risk in this trade. So I am going to look about 2 months out at the 90 call and selling the 95 strike call with the assumption that we think that price is going to get above $95. And why do I say this is a limited risk trade? Well, the most we are risking on this trade is $250 in this case. So that is the debit that we are paying. Now, what's the most we can make on this trade? It's going to be the difference between our strikes, which is a 5 wide spread, minus our debit of $250. That's going to give us our upside of also $250 in this case. So if I look and I hit confirm and send, well, the price moved a little bit. This may give me that kind of directionality in that sense to take advantage of an up move in eBay here. So I'm going to place this trade here and place that in our getting started with technical analysis. Just an example trade on what an options trader may do if they do see that confirmed move in trend and momentum. And another one here for you. We have Google. So we saw that tad bit of a bearish divergence, but if we're being honest, we are still seeing that move well above 70 there on the RSI, still showing that we do have strong momentum in this name. So what we may do is, as an options trader, we may craft an options strategy that tells us that we may be still looking to take a bullish trade in this stance, but we may be looking to put that trade a little bit below support in this case, should it make a support retest with that slight little divergence in momentum. So I'm also going to place another example trade here. I'm actually going to look a little bit closer with Google, and I'm going to look at the 13th of February, 2026. And we're actually going to look at the put side here. So this tells us that we assume that the price of the stock is going to stay above a certain level. We want to collect a little bit of premium with this in a risk-defined way. So we're going to look at a short put spread in this sense. And let's go back to the chart and see where we could possibly see price retrace to. Okay, so if I draw that a little bit closer, we could see price retest this area around 328 or so, which would be kind of like that tight level. Another area that we may see that price could even retest and pull back a little bit below support is this area that's been touched quite a few times as well. I'm going to extend this all the way to the left. Right around 320, 322. Okay, so we have a couple different areas. 328 or so, 322. I'm going to look at the options chain here. And let's just set up our bull put spread in this sense. So we think the price of the stock is going to stay above our strike in this case. We have roughly, based on implied volatility, we have a assumed move of roughly $31, almost $32 in either direction. So what we're going to be looking to do is place a spread trade here right below that lower level of support. So I'm going to buy that 310, sell that 320 to give me about a $265 credit here. So if the price stays above 320 during this time period of the next month or so, we're going to be able to keep that credit. Okay, so that's the most that we can make on this trade. The most we can lose is the difference between our strikes minus our credit. So if I take a look at that, that's going to be roughly $735 to the downside. Now that's assuming that if price does pull back a little bit, it will firm in, hold in that support. Since we are seeing a break to new highs, we are also seeing a move to the overbought levels in the RSI, giving us that strong trend, strong momentum signals here. So I'm going to place that here in our getting started with technical analysis one and send that trade as well. So gave you a couple different trades there just from looking at both trend and momentum. Hopefully this gave you a good overview of just how to use momentum specifically with the relative strength index, how you could use it to possibly just spot some of those early warning signs in a possible change of trend to the upside or to the downside, but the ultimate reminder being that price is number one, momentum comes second. So that's going to be the main thing that I want you to take away from this class today. Number one indicator is price. Momentum is a added indicator that you can use as well. And this today was some different ways to kind of spot how to use it to confirm the trend or to give you those early warning signs. So thank you very much for all of your questions in the chat. JB, shout out to you. Thank you so much for your help there. Please follow us both on X. James is James Boyd CS. I am Rachel CS. Please like this video. If you found it useful, please subscribe to Trader Talk Schwab Coaching on YouTube. And thank you for all for joining today. I hope you have a great day. Later, traders.